You are tuned in to the 5-Minute Signal, Business and Wealth. I am Vivian Thorne, economic strategist. This is not a finance podcast. This is a blueprint for building and defending your economic fortress. We don't do speculation here. We do strategy. 5 minutes on the clock. Let's get to work. The US dollar index crashed below 96, a level not seen in 4 years. In a single week, the greenback has shed over 4% of its value against a basket of major currencies. Gold responded by surging to an all-time record above $5,185 per ounce. Silver is trading above $100. The Swiss franc hit 15-year highs against the dollar. Oil climbed to fresh 2026 highs near $660 a barrel. And in the middle of this carnage, President Trump stepped to the microphone and declared, "The value of the dollar is doing great." The market's response was immediate, another 1% drop in minutes. Why it matters? This is not a technical correction. This is a vote of no confidence. Global capital is executing what traders are now calling the Sell America trade, a coordinated exit from dollar-denominated assets into hard assets, foreign currencies, and commodities. The timing is not accidental. Today, the Federal Reserve announces its rate decision. The administration is openly targeting Fed Chair Jerome Powell with criminal investigations. A successor could be named any day. The independence of the central bank, the very foundation of dollar credibility, is being dismantled in real time. When the world sees a reserve currency weaponized for political theater, it does not wait for permission to leave. It simply leaves. Here is the reality you must accept. The dollar's decline is not a bug, it is a feature. A weaker dollar makes US exports cheaper and inflates away government debt. Politicians benefit. Savers and wage earners pay the price. Every dollar you hold in cash, every bond you own, every fixed income stream you depend on, these are melting assets. You are not earning 4% on your treasury bills. You are losing purchasing power in real terms, while the government quietly defaults on its obligations through inflation. The safe trade of holding dollars is now the most dangerous position in your portfolio. The world is repricing American risk, and if you are still denominated entirely in greenbacks, you are the last one holding the bag.
We do not hold bags, we build fortresses. Here are 3 moves to execute before the next leg down.
1. Allocate to hard money. If you have not yet established a position in gold or silver, today is the day. I am not talking about speculative trading. I am talking about a permanent allocation, 10% to 15% of your liquid net worth in physical metals or miners. Gold is not an investment. It is insurance against the currency you are forced to use. When the dollar falls, gold does not rise. It simply holds its value while everything else sinks. 1. Diversify currency exposure. Open a brokerage account that allows you to hold foreign currency positions. The Swiss franc, the Singapore dollar, and even the euro are outperforming the greenback. You do not need to become a forex trader. You need to stop being 100% exposed to a single depreciating asset. Even a 20% allocation to non-dollar cash equivalents reduces your vulnerability to this specific risk. 1. Audit your fixed income. If you own long-duration bonds, treasuries, corporates, or munis with maturities beyond 5 years, you are sitting on a ticking time bomb. Rising inflation and a falling dollar will erode the real value of those future payments. Shorten your duration. Move to floating rate instruments or treasury inflation-protected securities. Do not let your safe income become your biggest loss. The printing press can create currency, but it cannot create trust. And trust, once lost, does not return on command. I'm Vivian Thorne. This has been the 5-Minute Signal. Stay sharp. This program is for informational and educational purposes only. Economic strategist Vivian Thorne is not a licensed financial advisor. This content is not a substitute for professional financial, investment, or legal advice. Always consult with a qualified professional before.